Might get started, eh? Yeah. All right, well, thank you guys. Really appreciate the crowd. It didn't look like we're going to get any people here for starters, so it's good to have a few people here. So we're from, my name's Matt, and this is Bob Hand from Latitude Real Estate. We're going to talk to you a little bit about property investment and what we're seeing in the market at the moment. I'm going to introduce the great Bob Hand. He has a substantial amount of experience within the real estate space, predominantly within the land segment. How are you, Bob?
Very well, Matt. Thank you.
That's good, mate. I'm going to throw it over to you quickly to give the crowd a little bit of an introduction to yourself and what it is that you've done in this space, mate, because you've been in it for a while.
Thanks, Matt. Yeah, I'm a bit of a dinosaur, Matt. I've been in the property industry here doing land and property developments for 42 years. I was part of a company called Oliver Hume for 20 years and sold that some years ago and started a land development company called Villawood, which I was in for a number of years, and sold out that to participate with my son in this business, Latitude Real Estate. We focus on the marketing of residential land subdivisions, medium density housing, and along with Matt, we have a company called Buyfair, which is about educating people on investment properties. So if I might start, one of the big topics at the moment is it a good time to buy or not? And the reason I raise this is because over the 40 odd years that I've been doing this, the media have never got it right. Right up to more recently in March 2019, we were all told when COVID started that the property market was going to die. There was no future in our industry, and we all panicked. There's no doubt, even people in our industry thought the end was near for all of our businesses. And as it turned out, we saw the biggest boom our industry's ever seen. I thought 1989 was good, but the last 2 years has trumped that. It's been a massive boom. And back in 1989, when the market ended, it ended, and it was very quiet for a long time, but prices still continued to go up. So what we have got is a few examples that we found from the media of the past, and it tells a little story. So the first one was back in 1992, when in the Australian newspaper we read no one is going to invest in property again. And I might note at that stage the median house price in Melbourne was $125,000. So, but it just kept going. It doesn't matter what era we take. Further into the 90s, in 1995, in The Age, the headline was property investment to drop. Median house price was then $129,000. It didn't drop, so it just kept going. In the Australian, in 1996, we heard that property investment loses its shine. It didn't lose its shine. Median house prices were $131,000 and still rising. So then, in 1998, we saw in Personal Investment magazine, which was a pretty big publication at that time, beware of the love affair with property. Median house prices were still rising to 155.
So when you see these things in the media, Bob, and obviously we're going back a little bit before 2000, and we're still seeing it today. Obviously the media is reporting on what's happening in the market today, and it's pretty doom and gloom. Do you see that they get it right too often, or?
No, and I think they've got it wrong again. We're in the land space. We're not in the established home market, and maybe there is a bit of a correction happening in that area. What we're really seeing out there at the moment is there's no doubt prices are not moving upwards at the moment in residential land, but they will. And this is only because we do have an historic low in the amount of supply. There's pressure on the state government to rezone more land, which they're not doing anytime soon. So we have limited supply. And we combine that with the fact that we've got a serious rental crisis on our hands. We have a shortage of housing in Victoria, and it needs to be fixed. So there's no immediate fix. And then, of course, what we have got is for the past couple of years, which we'll see on our slides a little bit further in, and we've had negative migration pretty much. In actual fact, in Melbourne, we actually have had negative. A lot of people have packed up their bags and headed to Queensland. And as we know historically, they'll soon find there's not a lot of employment up there, so they'll all head back again. But more important, migration will commence again, and that will start to drive our market again.
So what were you seeing? Obviously, we've seen incredible increases in values of housing across Australia in the last few years with the pandemic happening. What was it that you seen being the main driver of that growth?
Well, we had such positive migration. We had 120 odd thousand migrants arriving in our country each year over the last few years. And it's interesting to note these people don't jump off a plane and go and buy a house. They get off their plane, they establish themselves in Melbourne, they'll find employment, they'll rent somewhere and establish where they want to live. And probably within 3 years of arriving, they start to buy. So as the migration gates open up again, we're not going to see these people run in to buy housing, but there will be an increased need for more rental product.
Yeah, and we'll go into some stats and show you a little bit about what's happening in the market at the moment and long term as well, because there's some pretty consistent trends there that we can see, and I think it's probably comforting for younger people getting into the market. You do have a couple of books, mate, that you've written, and I'm a big fan of them. Do you want to tell us a little bit more about the 2 books that you've written and what they're going to help people with?
Yeah, look, I wrote a couple of books. They're pretty simple. I mean, I left school when I was 15 to be a carpenter, so I'm a pretty simple bloke. And most of the books in the market were a little bit too sophisticated for me. I wanted a couple of books that you could read in 40 minutes to an hour and pretty much understand the principles of whether you're buying a first home or an investment property. It's not that complicated, but what I was finding was I go out to our projects on the weekends, land projects, and probably 60% of the people coming through are investors. And what we were finding is when we sat and spoke to them, they had no knowledge of how to go about this and what was involved. So Matt and I actually spend a lot of Saturday mornings out on the projects running investment education programs for these people. And they really embrace it. I mean, and I enjoy doing them, quite frankly.
Yeah.
So.
It's a very small percentage of people that actually invest in property and have multiple properties. What would you say for people that want to get into the space and want to build a bit of a security network for themselves and investing? What would you say is sort of a couple of key things that you look for?
Look, I think it starts off. I mean, anyone can create wealth from property, and I think the ideas that people have is, it's not for me because I'm not on $250,000 a year. I'm only on $100,000 or $50,000 a year. I can't do it. And really, creating wealth is about multiple streams of income. And I honestly believe that if somebody's earning $50,000 a year, they're going to live in a certain house, they're going to rent, they're going to own a certain car, and they're going to live on their $50,000. If somebody's earning $150,000 a year, they're going to live in a better house, drive a better car, but they're really not going to have money left over. However, by investing in property, you can get those multiple streams of income happening where you're seriously creating wealth. And I might go back a bit actually. Like when I bought my first home, and I'm seriously old now, but when I bought my first home, it was $12,500 I paid for my first house. It's just ridiculous. But that was, 40 odd years ago, I suppose, maybe 43 years ago. But the growth in property is incredible. And people make money from property, but they sell it and cash it in all the time. Buying property is about buying and keeping forever. And you're just going to keep building that program. But even I go back to when I started in real estate, it was 1982, I think, and the blocks of land we were selling were in Endeavour Hills at that stage, and we were selling blocks of land, 750 square metre lots that you'd pay $9,000 for. And I remember probably by the mid-80s, one night I sold a house for $49,950. Was our last house and land package under $50,000. And that night, myself and the 2 guys I was working, we had a beer, and we thought, holy shit, this is it, it's all over. No one is ever going to pay more than $50,000 for house and land out here.
Yeah.
And we rocked up next week and somebody paid 51, and we were so bloody excited. So and it doesn't seem that long ago. And you look into the 90s there when we read those out, the median house prices were only $150,000, and that was in the mid-90s.
So we're looking at some stats the other day. I don't actually have them up on the slides, but I think in 2000 it was something about, it's about 8 times from income to median house price in Australia. I think the median house price, in Victoria was about $38,000 for median income.
Yeah.
And the average home or median house price for homes was about $330,000 or $300,000 or something along those lines.
Yeah.
We're now sitting at about 11 times income, so we're at about $90,000 as an average income and about $900,000 or $950,000 for a median house price. So it is becoming a little bit harder to get into property, but we're definitely seeing a lot of government support as well. Are you seeing that come through in the land space?
And I think the government support will continue. I mean, I think it was back in the 80s the government decided to abolish negative gearing. However, then the government had to come up with enormous amounts of money to cover social housing. And I know before this election there was a lot of talk that maybe negative gearing would be abolished. The government cannot afford to do that. We've got a shortage of housing now and it's worsening. So I think if anything, the government will need to increase the incentives for people to invest in property. So, I mean, Matt's got his statistics, that's why I said I'm a simple. But Matt did get some statistics together to demonstrate the growth in property that's expected over the next, between now and 2050, wasn't it, Matt?
Yeah, well, we've got a couple of stats that I think are pretty important to see. We won't go into them too deeply, but we'll bring them up on the screen. I mean, you've been through a couple of, obviously, recessions. 2007, I think the 1980s was also, a pretty big adjustment as well. We're probably seeing a bit of an adjustment at the moment also, but I think the government's the contribution towards the overall economy through the property industry is about 60% of our GDP. Probably one of the main reasons why the government's going to keep supporting it.
But they will, and like each time it's slowed, it hasn't really slowed for long. The interesting thing to note from what we're seeing at the moment, in 1990 when we had a crash, and it was a crash, out on our projects we saw no one. I mean, just no one came. I mean, there was no sales to be made. Yeah. The thing that's different at the moment, our inquiry rates on the average project through the boom over COVID, we might have been getting 60, 65 inquiries a week. Before COVID, we would have been getting 10 to 15. At the moment, we're probably getting 30 to 35 inquiries a week on each of the projects, which is quite staggering because that is our underlying demand. People are sitting and waiting and they want to know where interest rates are going to end. But quite frankly, interest rates are still incredibly cheap. In 1989, interest rates were 18%. So where we are at the moment is very manageable.
Probably comes down to what you're saying about your lifestyles as well. People are used to being in this low interest rate space, and seeing that increase is a bit of a shock for them. Do you think people have maybe stretched themselves a little bit in the last couple of years? Or?
Yeah, they definitely have. And I mean, I think one of the biggest things that stops people from buying, and especially if we talk about first home buyers, is first home buyers have expectations of what they want in this house. And the sad thing is they decide not to buy because they can't afford the 4-bedroom, the study and the 2 bathrooms and the big garage and sometimes a spa or whatever it might be that their aspirations are, so they decide to save a little longer. They don't save at the rate the prices are going up, so they never get started. And I remember when I started, I mean, we used to buy what we could afford, and we all did okay. We made a great deal of money from that. So I encourage first time buyers to get into the market as quick as they can and buy what they can afford, not what they want. And the same from investors' point of view. I mean, if you can afford to get a house and it's only 3 bedrooms, a couple of bathrooms and even a single garage, you're going to get a tenant in there and you're going to start creating wealth.
Yeah, no, I agree. And I've dealt in the first home buyer space and the investment space for a long time as well, since about 2007. And it's always been the same outcome with people that have got themselves into something and got themselves started. Once they've generated a little bit of a gap in between what they owe and what the property's worth, it's opened up doors for them. We've put some stats up on the screen there about what prices are set to go to by 2040, which is about 20 years away, and it's pretty staggering. And you can definitely see that Melbourne and Sydney, which are the 2 states that really have the main sort of growth from a population standpoint, it's pretty crazy to think what those numbers are at, Bob. And I don't know if you can see them, but $6 million and $5,800,000 or something along those lines for Melbourne.
My eyes aren't good, but I mean, you look at this. I mean, I had a young guy come to one of our investment programs not long ago, 32. He was fly-in, fly-out job, and he had 8 investment properties. So easily he'll get to 10 by this stage, and if you have a look at that, he'll probably have them paid off and he'll be worth $50-odd million. So it's not a bad effort.
So why do people, I think it's an interesting topic because quite a few people advertise that they've got 30 properties under the age of 30 and those kind of things, which is probably a pretty crazy outcome. But why do people have multiple properties once they get started? What is it for people that might not have experience?
Look, the key is it's not about how much money you've got in the bank. These properties do appreciate and they'll continue to appreciate, and as they appreciate, you keep adding more homes. But do it gently, don't be in a rush. If you're young enough, it's going to happen anyway, and you will create enormous wealth. Probably the biggest hurdle or biggest thing we see people go wrong with is that they get a little bit ambitious, they get a little bit ahead of themselves, but always have a look at your cash flow and be able to comfortably afford to add to your portfolio. Don't take risks.
Yeah. I've just brought another stat up. So Bob's not really a stat man, but so this is a UN prediction for Australia's population over the next 50 years, and in 2070, which seems like a long way away, but it's really not. The population forecast is to be at 35 million in Australia. We're currently at 26 million, so that's about, off the top of my head, about 35% more than what we have currently. So for people that say that property prices are going to, sort of drop off for a long time, how do you see that playing out?
Yeah, well, see, this is where it's not possible, and this is where long term we're going to continue to see growth and probably reach those. What was it? Not the UN numbers, but the other figures you had, $5.5 million for a house.
For a median house price.
Yeah, I mean, whilst it's ridiculous, it's no different to when I started. When I bought my first house at, for $12,500, if somebody told me what you'd pay for that house today, it's not possible to believe that. But population growth is what drives our pricing, and you've got to remember that there's limited opportunities to live close to Melbourne or Sydney. So these people just keep getting pushed further and further out, and it keeps driving prices upwards closer in. And areas that we think are a long way out of town today, in another 10 or 15 years, ain't far out at all. So.
Yeah, absolutely. So the forecasted numbers are 600,000 people to migrate to Australia per year, with about 400,000 people leaving. So that's a net migration income of about 200,000 people a year.
Yep.
And as you said, they all need homes to live in. They don't go out and buy straight away. So we can probably expect for that to be a little bit of a delayed outcome, we would think, but it's a pretty strong set of numbers.
Yeah, look, I think there's a delay, but I think the thing is more and more people are waking up, and as I said before, 60 to 65% of the inquiries we're currently getting are from investors. And I think investors are getting the idea that whilst interest rates are going up, rents are going up considerably as well to cover some of those costs. So I think we'll see the smart investors re-entering the market fairly early.
Yeah, so vacancy rates at about 1% currently. So how are you seeing that affecting investors? Obviously, with interest rates increasing and rental rates going up as quickly as they are?
It shouldn't affect investors. I think everybody is running a little bit nervous. The feedback is people are worried about the building industry at the moment. Will my builder survive? And they're all concerns, and they're real concerns, but I think that will die down. I think we're seeing material prices will start to come back, and price will come back on building, I believe, but land prices won't come back because there's such a shortage.
Yeah, absolutely. We actually want to try and get to some questions if we do have any questions in the crowd. No stress if we don't, but I might just introduce a new initiative that you and James have come up with, and I've come on board to get involved with it as well. We've got a couple of stats there that you like, but so Buyfair Property Group, why don't you tell us a little bit more about that and what we're trying to achieve with Buyfair Property Group, because I think it's a pretty cool initiative that you've created.
Yeah, so the Buyfair came around through frustration with the industry, quite frankly. Some years back we were doing trips to China, selling investment properties in China, and the thing that frustrated me the most was by the time we paid all the representatives in China and what have you, we found the prices of the houses we're selling were probably $50,000, $60,000 over what they were really worth, and I felt that was very unfair. And there's a lot of that happens locally as well through selling through investment channels, and people very unaware end up paying too much for their properties. And I felt that if we could create an education program that educated people and sold people houses at the right price, then it would work very well, and we're just establishing it now. And I see it being more of a club than a selling program, because what we want to do is educate people and assist them into the future. I don't have many years left in the industry, but my son James and Matt do, where we educate, look for opportunities and grow their wealth with them. And I know some of the areas that we're promoting at the moment, I'm confident to the point that I bought them myself. And they're little basic things. A lot of investors come in and think, I'll buy a big 500 square metre lot, but the couple that I bought recently are only on 260 square metre lots, because you're not going to get a lot more rent by having a bigger block of land. And we know historically tenants don't look after gardens, so what's the point? So we hope that with a number of advantages we're taking on, and Matt can go through the advantages, but what we're trying to do is hold people's hand and walk them through the whole process, assess their wealth position every couple of years to work out whether they're in a position to do another one, and help grow a successful portfolio for them.
Yeah, I think it's really cool, and there's definitely some really good product ranges that are being created. I think that we need to also be, intelligent with how we approach investing into property. So I think things like, multiple tenancies under one roof and these kind of things will probably come about a bit more.
Yep.
Why don't you tell us a little bit about the Investor Centre? I'm a bit mindful of time, but that's a pretty cool concept that we're working on. It's probably 2 or 3 months from being released.
Yeah, it's still a lot of work to be done on it, but what we're doing is we're building a display home in Lara, and fortunately we have neighbours being Metricon on one side and Simmons Homes on the other, which is very convenient. But it's not a display home, it's an investment. And what we're trying to do with our marketing teams is create like a science works exercise really, where it's touch and feel and digital applications where as you walk through the home you learn different aspects of investing in property, and taking what we've written in our book and delivering in a digital format so that when people come out the other end they have a very strong understanding of the advantages and how to go about investing in property without actually having to sit down and ask questions of us, which some people find a little bit awkward or embarrassing that they don't know certain elements. So it should be fun.
Yeah, so we've conducted some research recently, and the key thing that's come out of that from people that we're speaking with is that they really just don't know where to get started. So I think the Investor Centre is going to be a really good incentive for young people, first home buyers as well. Generally, first home buying is not about building your dream home. It's about sort of getting yourself started and then being able to build from there if you have the guidance that we can provide to help you with. So. I might actually jump onto some questions if there's any questions from anyone in the crowd. Is there anyone sort of looking to build or get into the investment space currently that has any questions? No?
So look, for those who are interested in the book, we have got a handful of, our stand is just behind us here at Latitude, so we have got a handful of the books available, the investment one anyway. The first home buyer one we can send to you digitally, but the investment one's probably worth a read if you want a bit of an education.
On a finished note, mate, what's your last piece of advice to anyone trying to get started?
Look, first home buyers, like I said before, buy what you can afford now. Don't wait, because you won't keep up with the increases.
Yep. No, I really appreciate it, mate. Thanks for your time and thanks for showing up, and appreciate you guys as well. Thank you. Hope you got some value out of it.
Yeah, and I'd like to thank OpenLot too. I mean, I think what they put on here has been fantastic, and I hope they do it every year. We've had a really good group of people in here.
Yeah.
We've met some great people, and people are just looking for information. It's been a great venue for that.
Yeah.
So thank you.
Thanks, guys. Really appreciate it. Thank you.